Let's talk about fraud and invoice context in any one country. If more fake invoices are being created in a country, the reliance on a centralized, trusted database becomes even more critical.
So it's an opportunity, for the fraudsters, but it's also an opportunity for yourselves as a business.
If anything, in this context, AI is supercharging fraud. So ease of creating synthetic invoices up to deep fake, up to fabricated audit trails. Of course, AI can create a lot of extra noise.
Today, we're in Lisbon, Portugal at the FCI 58th Annual Conference to talk about digital public infrastructure and the current state of invoice finance. I'm joined by CEO of MonetaGo, Neil Shonhard. Neil, welcome.
Thank you for having me.
So in 30 seconds, what does MonetaGo do?
30 seconds. We are a leading provider of digital public infrastructure that de-risks trade and finance, that promotes more liquidity, and we sort of operate on a public-private partnership model, building national level infrastructure.
Thank you very much. So 6 weeks ago, we were at a roundtable in London. You were on our panel with the ICC Crime Bureau, Willis and Sullivan. We were talking about the current state of receivables fraud.
Mm-hmm.
What was being talked about inside those four walls that's not talked about publicly or on the conference stage?
One of the things that one of the misnomers in this space is people say that fraud's a big problem, everyone's tackling it, but often it doesn't get addressed, and not in a meaningful way. People might say that they're addressing it or doing the requisite due diligence and so on. But one thing I've realized painfully over the years is unless there's also a narrative of growth aligned to prevention of fraud, then nothing really has moved that quickly. So, what we've now got is statistics that show that our infrastructure has huge socioeconomic, developmental movement. Mm-hmm. And thereafter, obviously, that creates a lot of economic growth, and that actually moves people to sort of be more proactive in our space.
So there is a problem, but it's not necessarily being addressed right now.
There is a problem. There's two problems. One is that many people don't measure the problem. So it's very difficult to measure, for example, double pledging until either a fraud happens and then you see a number of loss, or some very, very rare reports that go out and ask banks on an ecosystem level, how much have you lost through this or that type of fraud typology? And that's actually quite rare. So what you need to do is sort of have centralized infrastructure to create sort of the data that's needed to sort of measure certain fraud typologies, be it double pledging, falsified invoicing, and the like.
So there's legal risk and there's operational risk.
Yep.
And you launched a white paper back in May, reflecting on some of the cases, the recent fraud cases, First Brands, Tricolor, when we were talking about double pledging of invoices. And I think it's clear that there were legal protections in place. The UCC argument worked. Losses had already happened. But would you say there's currently the biggest market gap and the disconnect is between the legal risk and the operational risk?
The operational risk is, again, difficult to quantify because no one knows how big the operational risk is until something cataclysmic happens. Let's talk about First Brands or Tricolor, for example. 3 failures: inflation, falsification, double pledging. These aren't exotic fraud typologies. They happen all the time. It's happened for decades, but now there's a way that we can stop these. And that's where we should sort of be taking this conversation. Now, the UCC filings has been a system that's been implemented for a very long time in the US. However, the failures of that are that it's state by state. So to poll and see if something is owned or securitized by anyone, it's a very onerous process. You have to go to each state essentially and find out if a receivable or a transaction's been owned by someone. That's obviously not a scalable solution in a market where financing is as mature and the size of the market as like in the US. The double pledging piece, both from more from an operational perspective, in the US, whilst that people have a perhaps a false sense of security in the UCC system. Ultimately, there's no centralized repository of data that is countrywide. And that's what obviously we've implemented in other jurisdictions with, very good success, especially in places like India and Singapore.
Well, thank you very much. And let's talk about that success, because you've been in production since 2018. You claim you've stopped billions of dollars of fraud. What does that tell us about the scale of the problem?
Well, let's talk about the scale of the throughput. There's hundreds of billions of dollars going through the system every year. And so it's not very difficult to get to billions of dollars in fraud prevented. Some of the statistics that come out of that after you start to reduce or take that fraud out of the market is what's more impactful, I believe. So, we've contributed to a 319% increase in MSME liquidity through the platforms that use our system in India. There's a 54% increase, and this is all since January 2023, 54% increase in financiers. Fraud rates going from 8-ish% to sub 1, right? And this is all pre-disbursement. So what happens there is you reduce the operational risk pre-disbursement. This isn't a post-transaction check where you're trying to get your money back after you've already lost it. This is stopping that fraud before the money goes out the door. And that's really important. And what that's created, that trusted data layer, is confidence in the data for the financiers to enable them to have the confidence to lend more. And that's where you see that growth. And of course, what's really, really exciting about that, especially like India and other markets, is what the socio-economic developmental story comes out thereafter. Because of course, being focused on the MSME sector in India, that means more women-led businesses have had financing. There's been a notable change in GDP and MSME financing. That's why the government's now mandating use of the TREDS exchanges, underpinned by our risk mitigation solution, because of the success of it and the risk being taken out of it. So it's parabolic growth.
So let's talk about the product itself. Can you walk me through exactly what happens at the point of a transaction, so pre-disbursement, when secure financing runs a check, and how that process differs to say a human compliance function of a bank?
Banks obviously do a great deal of due diligence and risk mitigation checks, of course. But what they all do is do these checks in silo. And it's all well and good. You can check every single transaction, but you won't know in silo, for example, if another bank's financed something that you're going to finance. And so in India, be it the TREDS exchanges or banks or anyone else, those transactions are sent to a privacy-preserving environment. In that process, they are cryptographically hashed. A transaction's cryptographically hashed. It creates a unique identifier. That's then encrypted, and analytics is done in a privacy-preserving environment to assess fraud, and we give a risk score. So, it starts to root out double pledging, falsified or fudged invoicing, and fresh air invoicing in the case of India. And the reason for that is not only do we do the risk mitigation check, but then we validate the invoices against things like the Goods and Services Tax Network. So that also gets rid of fresh air invoicing. So you really have a pretty holistic pre-disbursement check. And all of this happens in under a second at a scale of many hundreds of thousands of transactions every month, which is why it's been so wildly successful there.
Okay, and a question on the other Indian actors joining MonetaGo: SIDBI, SBI Factors, Credex's DTX, and India Factoring.
Well, let's look at SIDBI. So the Small Industrial Development Bank of India. That bank many years ago was set up and backed by RBI and the state to focus primarily, if not solely, on small business lending. They have come to us. We've been introduced to them. They're very close to the TREDS exchanges, obviously, and we align to all of their priorities, de-risking those that need it most to catalyze liquidity to that part of that market segment. And that success that we've had with SIDBI, we've recently just gone live with them, actually. And that success with SIDBI is being conveyed into other markets. So another example is Bahrain, where the Bahrain Development Bank, a bank that was established as its primary function to take funds from the core local banks and only lend to small businesses to promote this developmental narrative. Again, on a domestic or an international developmental narrative.
Mm.
Our system really, the net beneficiary of de-risking trade at that level, of course, is the SME. And again, you get that, economic growth or socio-economic developmental story behind it.
But why do you need additional actors once you get the main registry or the main government aligned?
Well, let's say that I don't use, secure financing in India, but I'm lending to the small business community.
Yeah.
Then that creates obvious opportunity for me to suffer risk or loss because I'm not a user of the system. So I could suffer double pledging or falsified invoicing through my system because it's not in real time pre-disbursement being checked against all the other users of the system. So in other markets, not in India yet, and we are working with the government, in other markets, it's becoming mandatory.
Yeah. Okay, understood. And I guess here we are, FCI's annual conference, and you became their global registry technology partner in October 2024. And I think there was a plan to focus on Africa, the Middle East and North Africa, and the Central Eastern Asia region as initial focus. What's been the progress?
Primarily, let me use South Africa as an example. In South Africa, there was a movement with the Bankers Association of South Africa, aka BASA, to do a risk mitigation pilot for the ecosystem. So the debtor finance book of the local banks is going to be used in an initiative in South Africa, which actually starts this month, in partnership with a technology company that we've partnered with. They're anointed by BASA, and obviously we've been working in lockstep with them to do a pilot with the local banks to root out fraud on historical data. And FCI was a huge proponent of that. So they actually brought us into those conversations when BASA were looking at creating an initiative that would de-risk local financing.
Okay. And can you talk about some of the other markets and how you're entering those and I guess developing the software?
Sure. I mean, staying on Africa, Nigeria is another one that's about to become very public. That's in partnership with TFCOP. FCI has been doing a great deal of work in Nigeria on the model of factoring. The primary focus initially was on how do we de-risk and promote factoring in the Nigerian market. We got brought in basically by TFCOP, and also FCI was speaking about us as well. FCI will be involved in that initiative because of obviously the factoring angle. Initiative in Nigeria is for us in partnership with local partners to establish a national level risk mitigation infrastructure, which has got the support of the central bank, local banks, and international players in the space.
Now, we talk about interoperability a lot, which always seems to stall in practice.
Yeah.
Why not consider a cross-border global registry?
There's an argument to be made for the use of a global registry, of course, and people do use that, and some of our countries obviously do use that. But a lot of people start domestic and then move to cross-border. So let me talk about why that's important. Of course, everybody's focused on domestic growth, and that primarily is with the small businesses. If you really want a notable GDP increase, it's all about the MSME, liquidity and taking the risk out of that. At that point that they get big enough to export, or the other businesses or the larger corporations in a country want to use the system, of course they can. But the interoperability in data standards is obviously key. So we'll talk about data sovereignty first.
Yeah.
Data sovereignty is very important in a domestic financing piece. Once people have got confidence in the system, they then usually permission us to enable cross-border risk mitigation. Now, our system from the get-go was future-proofed in partnership when we built it with SWIFT, obviously in a data messaging standards with an ISO 20022 compliant, but also to be agnostic to essentially any cloud or be on-prem or off-prem. So why that's really important is for many years now, we've all been advocating at MonetaGo for focus on interoperability. No one platform or platform monopoly should take over the world. And that's why our narrative of joint ventures everywhere, but also being able to, in one country, be on Azure, one country be on AWS, and one country be on GCP is really, really critical, but they still communicate across border. Now, moving on to the international registry piece, when we built the international solution with SWIFT, we actually stood up an international registry in Brussels. That isn't used as much as our domestic registries, but we still use that. And that's also been very successful in international risk mitigation. What's key on the interoperability piece here, everyone uses a term for what we do often as invoice registries, but actually, of course, it's multi-document, domestic and cross-border.
Yep.
So, I can present to you an invoice and then to another bank a bill of lading, but the same underlying collateral can be on that. So it's not just double pledging of collateral, it can be collateral pledged across different documents to different lenders also. And that's where that interoperability, data standards piece becomes even more critical, because registry in country A has to communicate with country B across multiple document types. And actually, with the failures of registries in other jurisdictions when they've been, for example, in this context, on blockchain and invoice only, well, the banks are starting to leave these kind of networks because they've realized it's very limited use case or value from a system that has a very narrow focus on this type fraud prevention ecosystem or typology. And really, it needs to be cross-document, cross-border from the onset.
Is your strategy, therefore, not when you enter a market to go bank by bank, rather look at convening governments, multilaterals, and central banks?
Yeah, and the reason for that is if I'm a bank, I want to lose less money, have greater confidence in data, and lend more. Okay, and that means actually it's a revenue generation tool, not a risk mitigation tool for a bank. From a government perspective, assuming the government's on the right page, I want increased visibility and transparency of my financial ecosystem.
Yep.
If I have a centralized repository collating all data of not just invoice financing domestically, but imports and exports, actually it's a revenue generation for me as a government too.
Yep.
Because I get to see and potentially collect all the extra duties that I might have not known of.
Neil, let's talk about artificial intelligence. And honestly, is it a threat to your business model or an opportunity?
Absolutely not. If anything, in this context, AI is supercharging fraud. So ease of creating synthetic invoices up to deep fake, up to fabricated audit trails. Of course, AI can create a lot of extra noise.
So it's an opportunity.
It's an opportunity
for the fraudsters, but it's also an opportunity for us, for yourselves as a business.
Again, let's talk about fraud and invoice context in any one country. If more fake invoices are being created in a country, the reliance on a centralized, trusted database becomes even more critical. So that's not going anywhere.
Thank you very much, Neil. So when we're sitting here next year in KL,
yes,
what do you want me to hold you accountable for in terms of success and growth of MonetaGo, but also more importantly, reduction of fraud? And ultimately, we're going to be battling the increase of fraud due to advances in AI. So you've got to double down on your fraud reduction.
By the time that we're in KL next year, and speaking regionally specific here, we'll have a lot of exciting news from ASEAN already public, but also just in general, our growth across both Africa, the Middle East and ASEAN as a whole, we're very excited about.
Thank you very much. That was Neil Shonhard, CEO at MonetaGo, speaking to us at the FCI 58th annual meeting in Portugal. Neil, thank you very much.
Thank you for having me.